that shit. You go through it, and if you're able to withstand that stuff and survive, then that's what matters. That is what matters. Duns, thank you for the super chat. 26% year to date. Didn't add for 6 months due to unemployment. Thanks, Amit, for 2025. Both you and the community are amazing. Happy New Year, all. Stay safe. Duns, Happy New Year to you. Thank you for being here. Congrats on the 26% year to date. And thank you for being here every single day as part of the community. BCAP, thank you for the $6.70 super chat. Surprised none of you guys did a $6.70 super chat yet. I'm happy we're ending out 2025 with at least one of those. You're the man, Amit. Thanks for a great year. I learned so much from you, and we'll continue to learn from you. Thank you so much. BKP, thank you for being here. And thank you as well for that 6-7 super chat. Because I deeply, deeply appreciate that as well. All right, folks. So that is the performance year to date. Before we bring Sam on, I want to read a couple things that Cactus sent me. These are a couple of like awards or a couple of things you could claim as potential awards. So best performing S&P 500 stock was SanDisk. We talked about that yesterday. That was part of the, what do you call it? That was part of the giveaway that we did. And I believe most people should have got their award yet. If you didn't, email me, but I think pretty much everyone got it last night. Biggest plot twist, he has Intel, which makes sense. Intel up 84% year to date. NVIDIA closed a $5 billion deal. The Trump administration invested $4 billion. So that was a big turnaround. Comeback of the year, he has Robinhood. Dead app narratives got smoked. It ripped 200% in 2025. Technically, you could say that was a comeback after April. But the thing is, a lot of names were comebacks after April. The entire market was a comeback after April. So that is fair. Villain Candle Award, the day that traumatized charts. He has DeepSeek, as that took NVIDIA down 40% over the coming weeks. Bag Holder Hall of Fame. These are actually good ideas, Cactus. I'm going to give this to Steve today, and he'll give me his answers for these. We both probably have different answers. He has SMCI. I think we know what takes Bag Holder Hall of Fame of the year. I don't even think I need to say it, but I think we know. And then finally, he has CEO of the Year with Jensen Huang. CEO of the Year with the Jensen Huang NVIDIA. Comeback of the year could definitely go to AMD, 100%. That thing was in the gutter for a while, and then you had that OpenAI deal. Lisa Su did what she had to do. She delivered shareholder returns, and she made it happen. She absolutely made it happen. All right, let's bring on a guest on the show, get their thoughts on this end of year lack of Santa Claus rally, but overall thoughts on the year, and their thoughts on the broader market as well. Ladies and gentlemen, Mr. Samsolid. You are muted, sir.
I am muted. I always make that mistake all the time.
You learn from
Happy
Chris.
New Year,
he
sir.
Makes that mistake every time.
I always make that mistake all the time. Yeah, Chris does too. Was that SMCI hit to Chris, by the way?
I don't know. Cactus sent me a bunch of these random things. Maybe it's SMCI got caught with a lot of people.
Listen, I think we've 2005 obviously was not a perfect year for a lot of people. April was not a great time. We obviously came out in the positive side at the end of that, but I mean, I'll be honest, dude. Back in 2017, I think I blew up like a trading account or something. Like that was like when I started trading. And 2018, I actually broke even. So second year of trading, breaking even is like not exactly the best. I mean, breaking even on your second full year of trading is like, you know, that's good enough. But I mean, we all learn the hard things. In 2025, I mean, I know some people like they have not performed well this year, and it's very difficult to not perform well on 3 back-to-back double-digit years. But we'll see, man. We'll see.
So, first of all, Happy New Year to you. I hope you enjoy it with your family and your friends.
Yep.
I agree with a lot of what you said. I guess we'll get started into just your thoughts of 2025. Obviously, choppy, volatile. How do you think the year went, and are you happy with your overall performance and how you navigated the year?
Yeah, the performance was pretty good. I wish I pretty much just closed everything out on October 10 or hours before the Trump-China tantrum on October 10, because that's when I was doing phenomenally in the year. Came back a bit, but gave some back probably in the last couple of weeks. But I mean, I've outperformed the market this year. I'm up, but I haven't calculated exactly. It's like 70, 80%. So pretty good this year. And a lot of that really had to do with a lot of Amazon, a lot of on Semiconductor toward the end of the year. A lot of Nebius, Robinhood, and Robinhood is up phenomenally this year.
Yeah.
And a lot of that was options trading. And I think for 2026, I want to focus less on the options because it's a lot of volatility, man. I mean, even like a lot of this stuff like Nebius and everything like that kind of volatility is pretty wild.
But that volatility is also
Yeah.
what contributed to those gains.
It is
for the year,
well,
right?
the options and the swing trading that I did actually were the main contributors for the gains, and a lot of it was given back because of Iron and Nebius getting slashed in half. I mean, like I think a lot of people really suffered in that, and to be honest, I don't know what 2026 is going to be like for those stocks because they just are not getting any volume or momentum in like the last couple of weeks. But as far as the market goes, I feel like the 40% intra-year swing that we've seen, I think that's basically a norm, right? I think we have to get used to these volatility up movements in the up and down direction. Like I don't think it's gonna go away. I mean, we're adding more algos, we're adding basically news being driven instantaneously through social media. We're adding a lot more influence to multiple crowds of the market. Retail is starting to have a lot more strength in terms of moving the market as well, even from a sentiment and fundamental perspective. I think that we have to get used to this sort of thing. Like I could honestly see like a 10 to 20% down at some point next year, and then back up, maybe double digits. We'll see. And Tom Lee is saying like 7,700, so that's like what 11% up from here, which is pretty good for the year.
The volatility that we experience and the way that volatility happened, I think the defining factor of this year, by the way, I thought this was also hilarious. MicroStrategy has this chart on their website comparing them to everybody else. And this is actually on their website. Unfortunately, they have to show that they're down 47% over the past year and everything else is up. But it was gold, which is up there as well, which is crazy. But do you think the year really started in April? Like that's what defined the year. The first 4 months before that were irrelevant. You either bought the dip in April or you didn't, basically.
So I was up like 22% in February, and I think you posted that too, that you were also up 22% as well. And it was just a slow bleed. Like I still remember like those last days in March and beginning of April. It was like down 2-3% every single day in my portfolio.
Yeah.
Like it was brutal during those days. I mean, as a growth stock investor, like those days were just brutal. And it's basically been up and to the right since then. I think well, obviously the market opened at the beginning of the year, and I do think the market does a bit of a reset at the beginning of the year. I think that the way that the performance happens in the stock market, especially with fund managers, is that when the end of the year happens, they completely reset, right? And the fact that allocation changes very dramatically for a lot of large fund managers, I think it's kind of irrelevant what happened the previous year, right? And really, price drives up. There's always a buyer for every seller. Like there's never more buyers than sellers, but it drives up because the buyers are more aggressive than the sellers. And I think that it's possible to see another double digit year. Like there's nothing that says we can't have that, right? I mean, you have the market cap, of course, but when you have people who are buying, paying a much more aggressive price or taking out the ask or whatever it is constantly over and over and over again with these news driven catalysts, it could propel the market even higher than some ridiculous valuations that could last for some time.
What is your gut feeling today? And obviously you're allowed to change your mind, but like, do you think 2026 is an ugly year, a choppy year, a bullish year?
If this is what we saw, if we're going to see something similar to what we see in 2026 as we did in 2025 with the 40% intra-year move, I'm ready for it. I'm ready for that happening. Like I mentioned, options really took a toll on my account February into April. And yeah, it took the other way around, but I would have been good only being up 10% in February and only down 10% in April. Like I feel like that kind of volatility for me is just, it's not fun to deal with, right? And also concentration more. Like I feel like if I'm concentrated more in like 10 holdings versus the 25 that I started out in the beginning of the year, then it probably would have been much more smooth. I would only focus on buying dips in certain stocks or whatever, and I would have to forego certain small wins and everything. But I think the bigger wins would have been a lot more amplified. Like, Nebius was only 3% of my portfolio starting out. I wish I had sized that more. Like, I wish it was like looking back on it, it's like, man, she just made that like 10% of the portfolio. Like the floor was so high in that stock at the time when it was in the $20 range that obviously in hindsight, I wish I did, but like I got to look at that. I got to look at stocks that I want to be positioned for in 2026. And I've been concentrating more size in those positions, right? When it comes to the self-managed portfolio. Like obviously, like I have a lot of SP5, I have a lot of SPY or VU, I have a lot of VGT and stuff. But like when I'm talking about the managed portfolio, like I am concentrated pretty heavily in certain names.
Yeah, I think that is very, very fair. And I think that concentration also really does matter when it comes to kind of understanding how the year could play out. And look, it's a question of the capital and the size of the capital you're working with. So someone asked me, how did your family do year to date? I'm just looking at it right now. My dad, 111%, my mom, 267%, and my sister, 144%. Now, again, those numbers destroy my 60%, but they're working off a smaller base. And I think, Sam, you've been investing for a while. When the base gets bigger, it's just tougher because you're managing so much shit that can go back and forth.
Yeah, no, for sure. I mean, like, if someone's managing like a $20,000 portfolio, I don't want to say it's easy, but it's much easier on a psychological standpoint to basically double that in a matter of a year versus like doubling like a multi-million-dollar portfolio. Because I don't care who you are. Well, I mean, maybe it depends for certain people, but like for people who increase their size of their portfolio very quickly, your psychology is still attached to the size that it was previously, right? Like for me, it's like if my portfolio moves like 10 grand in one day, like I'm like, oh, I've been just like, man, that sucks, right? Yeah. But if you really think about it, if my portfolio would have moved like $100 in like one day, in fact, I mean, like the way that things are, like, $100 is like a couple of ticks in a day, whatever it is. But if a portfolio would have moved that much, like I wouldn't really care. Like I want to get to the level where maybe a $10,000 move in a day or even like a $50,000 move in a day is like not such a big deal in the scheme of things. But at the same time, I don't, honestly, would you want to shoot for like another 60% year?
No, so I talked about, and we'll get into the Substack right now. I talked about that yesterday in the article, which is that like next year is a totally different year for me life-wise. Like there's a lot of other things I want to focus on other than being obsessed with the markets, but it's hard because I'm streaming about the markets 8 hours a day and I genuinely love the markets, but I'm also getting older and I also want to have a life just outside of the market. So if the S&P goes down 5%, I cannot be like, oh my goodness, like I'm down 20%, because that's what's going to happen when you're so concentrated in high beta when the S&P takes a hit. So I think there's a lot of different psychological ways to think about it. But if you can go up another 60, 70% year after year after year, like the Chris Camillos of the world, which are just so dedicated to taking on massive risk because that's how he has defined his investing apparatus, then that becomes an entirely different question. For the people asking what drove that performance for my family, so for my mom and dad, it was Hood, like exclusively. For my sister, it was Hood and Palantir. They all had other little random things here and there, but for my mom and dad, Hood is really what got the job done. My dad has some more NVIDIA than my mom. For my sister, it realistically was Hood and Palantir together because she actually bought Palantir at 20, whereas my parents didn't really get into Palantir that early. So speaking about positions, so again, this is what I outlined in the Substack. I'll link it right here. People can read it on their time. But here are my 13 positions going into next year. Max 7, Amazon, Meta, NVIDIA, FinTech, Hood and SoFi, AI, Palantir, Tesla, SaaS, Zeta, which I know you're a fan of, we'll talk about, Space, Rocket Lab, Crypto, BM&R, Data Center, Semis, Nebius, and Amcor, and International is Grab. I know you said you like to keep about 10 positions. Give me your thoughts. I don't know if you fully solidified what 10 you're going with, and I'm sure it's changing all the time, but what are kind of the themes you're playing to propel in 2026?
I mean, I think it's very similar to what you have right there. Hood is already a big size portfolio. Actually, when I'm like trying to think about it, yeah, no, I'm not really long any fintech, like new positions in size, right? I think Hood is probably like one of my, that's like basically one of my only fintech positions if you exclude Mercado Libre, which Mercado Pago. I'm very bullish emerging markets going to next year, and I think I'm expressing that through Grab in addition to Mercado Libre, right? I've pretty much like sized down Nubank pretty considerably so I can allocate more to Mercado Libre because Nubank has run so much lately. My Nubank price target for 2027 is actually hit already this year, right? So when that happens, like I have to kind of, I don't want to say it's cutting the flowers, the water, the weeds, or whatever it is, because in this perspective, like the weeds are the weeds really Mercado Libre. So I had to justify that cut in order to have more exposure in e-commerce, which I'm also getting through Amazon. Meta, I think, is a great mean reversion play, but I don't think Meta is going to be like $5 trillion or anything. So I have to be a little bit realistic with how I'm going to size that one. Amazon, I don't think I will ever sell that company. Like that's one of the best companies. That is the best company in the entire world, in my opinion. I'm sized pretty heavy in Zeta. Zeta is, I don't know, it's down like 2%, 3% today, so it's no longer 10% of my portfolio, but it's probably more realistically like 9%, maybe 8.5%. I haven't checked, but probably like 10% of that position is in options, right? So I'm not experiencing massive volatility when Zeta makes a big move, and it's already a high beta stock. Probably about 5 to 6% of my portfolio is in Path, and that's more of a mean reversion play because I think the thing is going to be like $50 by next year. Probably over 10% of my portfolio is on Semiconductor. I've already talked about that a lot. That's going to be that's a core position. I don't think I will sell that for a while. In fact, I think it's probably going to go to $100 by the end of the decade. And if that does happen, that'll be really great because I think 30% of that is in options. So Path, like 10% is in options, right? Amazon, all shares. Meta, all shares. Mercado Libre, good Lord, all shares. I got to bring up my spreadsheet real quick here because I think I have Adobe. I have a position in Adobe. It's not a massive position, but I think there's a bit of a mean reversion play on there. So like most of my stuff is like a medium to long-term swing that I have right now. And the rest of it is just basically core positions. I know I'm missing a big one. I mean, Grab obviously is on there.
Oh yeah, Grab. I forgot you're in that one. By the way, for those asking, what about VG? Honestly, after I published it last night, I forgot. I realized I forgot. VG is just so small, and like I don't care about it because I bought it just because Matt likes it. So I didn't really think it was a position, but yes, VG is.
Oh God, Amcor. Amcor is. I don't know how I forgot that one. Amcor is a pretty big position. That's mostly through appreciation as well, though. Robinhood obviously is an already big position. That one in Master, pretty good size, and I've been trimming a little bit at that lately.
Rubrik,
not a whole lot. Yeah, I have a position. I have a big position in Rubrik, mostly in shares. I probably should have waited to add it to that one again recently, but little do we know, it's back at the 200-day moving average. Nebius, of course, IREN, and ENS. Wow, that's a lot more positions than I expected.
Hold on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. No, I have 13. You have 14. Technically, I have 14 with VG, so we both have the same.
See, the thing is that IREN has fallen down so hard that like some of these positions have become smaller because of that reason. Like I was on cloud 9 with IREN and I totally got slaughtered in that one. And someone said Skywater. That's something I'm looking forward to hopefully building a thesis on. And I'm looking more into Skywater. I haven't gotten in yet. I don't know. I'm trying to wait for Skywater because that's it's a little bit more on the speculative side, but it does have that onshoring theme and everything. And I got to kind of figure that out because technically speaking, if I am going to go in Skywater, that would be like my 3rd to 4th onshoring theme that Stock Talk's been talking about. I don't have MU. All right. I lost money in the MU short. I don't know what happened with MU. Yeah. And I closed it. I closed it the next day. I'm not going to hold that thing. Like we all mess up, but, I used to have MU, but that was a swing position earlier in the year. Crypto, I mean, see, I'm not going to put VU in here. I'm not going to put VGT in here. I'm not going to put MSCI I'm not going to put that stuff in here. Like I don't really consider that as like self-managed or anything. That's something I just always allocate to and everything. But yeah, I mean, those are the main, and I also have crypto too, but again, like I'm not trying to trade crypto. Like these are like very concentrated positions that I have. And if we go from top to bottom, Amazon's going to be the largest. Mercado Libre and Rubrik are like one of the largest ones in there. But I would say like 5 or 6 of these is like 10% plus, and then the rest of them is like 3 to 4% or even less.
So what is your philosophy next year? Because I had a variety of different perspectives in the article last night to think about it, but I've spent the past 3 years in high beta, and I've loved it because it's been a thrill. It's been exhilarating. It's been an exciting journey. It's been heavily concentrated, so you're only focused on a couple things, and you're like just deeply following it. But now it feels like those valuations in 22 are not the same in 2026. And there's a lot more things to navigate. So what is the goal with your, outside of just growing it, because we all want to grow, what is your goal next year for the portfolio?
So, I mean, I'm adding a lot of money to my portfolio every single month. So it's not such a big deal to me in terms, like, I'm not trying to build like a massive nest egg of companies that I want to invest in for long. Like, I'm not trying to be a Warren Buffett. All right. Like, I'm not really a buy and hold person because I always find like new ideas. I look at the market every day. I see what's working, see what's not working.
And that's okay, by the way. It's okay to not be buy and hold. It is totally fine to be in and out.
I tried to do that in 2023, and I feel like it really held back my performance. And 2024 was a lot better in terms of performance, but I still feel like I missed out a lot in 2024. This year, I kind of switched up my strategy in the last probably June-ish, and then I fully transitioned to my strategy this time where it's like, look, I like the themes that I invest in. I don't mind about the beta because I'm pretty confident that if the market were to drop, that I would know when to throw on the hedges and then chill out and like not throw more money at stocks, right? Like I feel like that's the mistake that I made February to April, was that I was like trying to call the bottom. I was blindly buying the dip sometimes. I was adding on leverage on times when I shouldn't have added leverage. And I was literally trying to navigate my way out of a storm from February into April when I should have just stayed put and not did anything, which is what Stock Talk did. And I've been looking at strategy closely, and I also have a few people who mentor me as well, kind of see what they're doing. It's like, look, when those situations happen, it's a lot less stressful to not try to time the bottom and do more planning ahead of what you will do when things recover, right? So I pulled off that show in October. And yes, a lot of the volatility in my portfolio was mainly through those high beta stocks, but I was able to navigate a good portion of that and reduce a lot of drawdown by hedging. And it's done pretty well. Like, in fact, I think I was able to reduce my drawdown by an additional 10 or 15% just by hedging. And no one says the market should have not went down further in late November. It could have. And if it did, I would have been totally prepared. And when it didn't, I cut those hedges out, right? So,
dude, if the market ended in late November when shit was hitting the fan, I mean, we all would be still singing a different tune, which is why I'm like really on this gratitude theme. Because if that was the performance end of November, I mean, I don't know if a lot of us are being the S&P, quite frankly, because we're also into high beta. Those got destroyed when the S&P was down 5%.
Yeah. I do think that 2026 is a year of value and companies that are actually profitable and not like pre-revenue companies, not companies that are like burning cash left and right. You know, there's an exception to certain companies that are part of a mega and secular theme, right? You have Rocket Lab, part of that theme, which obviously is not a profitable company, but they have prospects to get there and probably has like one of the most backing as far as defense contracts and everything. Like, pretty sure Rocket Lab is going to be well as a company in 5-10 years, right? So like something like that would do well. But like with companies, and I'm not trying to shoot myself in the foot because I do own the position, is that like, look, it was great with Iron, Nebius, and all these miners back in September and October, and I would have thought so too, but like the market speaks volumes, right? It is very concerned about the enormous amount of debt that these companies are taking out to build these data centers. And I'm not backing away in that theme. I'm just positioning myself concentrated-wise in companies that I know will survive any type of catastrophe that might happen if it comes to this. Like, guys, this whole financial stuff that's happening, it's not what's it called? It's not a conspiracy. This is very real. There's a reason why Oracle is down here because the bond market is looking at its debt and it's like, we don't want to buy this. We want to hedge our bets and insure ourselves by buying these credit swaps or CDSs on Oracle debt, right? Like, that's a very weird thing to happen. That's a very crazy thing to happen. And I'm okay if I don't catch some crazy turnaround play in IRN and Nebius. I'll just keep what I have, right? Like, okay, IRN can go back to $100. It can, right? And if that happens, okay, 1.5-2% position becomes like a 6% position, right? But I could have like went all in right now and made so much money. It's like, but how do you know that? Like, I'll wait and see what happens, and then maybe I'll trade it when it does happen. But until then, I'm not going to sit here banking on that momentum to come if it's not even there.
Let me ask you this question. October 9th, when everyone started going on Zillow to do a little bit of window shopping, what do you think is the lesson learned from that moment? Because for me, it's, I mean, quite obvious, which in hindsight feels obvious, that if it feels too good, and it's felt good all year, but that which is why it's so hard to time this stuff. But if it feels that good, like I rent at 80, maybe time to trim. Like, is there any takeaway for you on how you could have better managed that time for you as well?
I was riding high, just like everyone else when that happened. I was like, there was not a single cell in my body that said like, maybe I should cut IRAD in half, or maybe I should cut Nebius in half. Like there was not a single cell in my body. And I think that was the mistake that I made was that, look, we have to be pretty real with some of these valuations. And we have to take a look at what sentiment is out there. And we all got smacked in the face with that in October 10. And we were so high on that sentiment that even the weeks after that, we did not get the hint, right? Yeah. Like I think that I mean we're all gonna make mistakes, right? That was the mistake that I made. I should have like chilled after that, whatever. But like I'll be honest, I made some stupid swing positions like around that time too, which has hit the portfolio a little bit as well. But I mean, you know, I think it's a learning game. Like I feel like this is supposed to be a marathon, right? Like, is it going to be like, well, that's it, guys, I give up, you know, that sort of thing? Or is it going to be like, I'm going to keep doing the same thing I'm doing all the time, no matter what? Like the market changes, and so should we.
I agree. Do you have any fears of gold and silver doing what they do for next year? Are they warning us that things are going to happen badly for the market?
This is the thing I was doing on the stream yesterday was that the move in gold and silver is like eerily similar to the beginning of 2021. And we know what happened in 2021. And the market went up like 20-25%, and then it topped out at the end of the year. So like if I were to look at that pattern, it'd be like, well, we have another year left, another year and a half left, right?
Yeah.
But I don't think silver has topped. But maybe that's just me. You know, I mean, obviously the market's not telling me otherwise today, but it doesn't look like silver's topping, in my opinion. It looks like it's just going to consolidate. And it looks like it wants to go higher, in my opinion. And gold looks like it kind of wants to go higher, but gold has a historical performance of consolidating after these massive moves for like years on end, right? Or maybe even months at least. And gold did chill for a little bit. Remember when gold went to like 3,300?
Yeah.
And it chilled for like 3 months, and everyone's like, oh, time to go back to growth stocks, whatever, right? And then gold just rallies out of nowhere to 4,500. Like that stuff can happen. I mean, we're talking about a $33 trillion asset, right? It can happen. Like silver, I don't know what silver is, but I think it's more expensive than NVIDIA now, right? Or at least close to it. I think I actually gave that crown back to NVIDIA.
Yeah, it was briefly for 20 minutes above NVIDIA in market cap. No, I agree. It is very confusing. I also agree with you that I don't know if it's topped, but to have the audacity to say it's topping, like there's a lot of structural factors that are going on here that might be a bit different. Sam's Twitter right there in the chat. Everyone can make sure to follow Sam if you are not following Sam on Twitter. Sam, what do you think about AI next year? Do you think the party keeps going on and data center growth, GPU growth, all that is strong?
I mean, I think this theme is here to stay, at least until 2030. Like, there's some crazy forecasts that we're seeing from a lot of energy company or energy institutions, obviously from like the biggest financial institutions in the world, and all this research we're seeing from multiple sources. Right? It doesn't look like it's stopping anytime soon. The only thing is that there's a difference between what the data is telling us and what the market's telling us, right? And the market is forward-looking, but I don't think the market is as forward-looking as people think. I think it looks max like 3 to 4 weeks ahead of time, even less than that, in my opinion, because it's just looking at the volatility of the stock market. But the data out there says is that energy is supposed to grow by 25% by 2030, right? And what is what is the momentum of this coming from? Like it looks like we basically have been like somewhat stagnant for the last 15 years. I actually had a post on it. I think I posted it. It's like a couple of posts ago or something. Actually, I think it was my last post, but this is an energy institution that posted this. This isn't like I don't want to say Wall Street Journal, but this isn't like NVIDIA that posted this, or this isn't like some energy company that posted it. Like this is an institution that does a lot of research on it, that provides these numbers, whatever. And like this isn't the only place I've seen it. This is the one that gave it best visually. But if you look over there, we've basically been stagnant as far as energy consumption for the last like 15 years. I think a lot of that has to do with efficiency, right? With just being able to transition more to EVs, being able to transition more to clean energy. Our products have gotten a lot better, so the products have become more efficient in terms of the amount of energy they're consuming. But then you see this huge hike up, and I don't think it's because efficiency went out the window. I think it's the amount of volume is ticking up very quickly, a lot from the data centers and a lot from the expansion of electronic appliances, vehicles, and so on. This is how much more demanding it is. But I also think emerging markets is also large contributors to this. So if they're forecasting this all the way to 2050, does that look like the market wants a top?
Yeah. You're basically
on
saying
a secular trend.
On a secular trend, 100% on a
Yeah.
secular trend, that level of AI momentum that is impacting so many different verticals, including energy and the utilities, which is very, very important. It's hard to say that's topping. So the like level of volatility for whatever reason, it's probably going to be there next year. But to say it's a structural, like the structural top in 2021 was everyone overhired because of COVID. We obviously were inflated like crazy because of low rates. And we printed $10 trillion in 7 months. Those were your structural reasons for why we got a top in 2022. It doesn't feel like that's the same unless there's something we're not paying attention to going into 2026.
I mean, it's very simple. And I think this is the same saying that we've heard many times, that you don't fight the Fed, right? If we were heading in toward a tightening cycle or a rate hike cycle, I would be a little worried, right? But we are not even close to one. In fact, I think they're heading toward a place where they don't have to move rates for years, right? We're very used to seeing rates go up and down very quickly in a matter of a few meetings, whatever. But look, they're trying to find homeostasis, right? They're trying to find a place where they can keep rates at. And I'm pretty sure 2.5 to 3% is their target. And once we get there, it doesn't mean like, all right, guys, time to go back up, right? Like the pendulum swings very far in one way, swings back the other, but eventually the pendulum finds the center, right? And I think that's where we're trying to head. And I think we actually might get close to there. The question is all these external factors around the entire world, where Japan is actually hiking rates now. And then you have these other countries in Latin America that are looking to start hiking rates because inflation is somewhat creeping back in there. These are going to kind of make the pendulum swing a little bit back and forth, but we are not going to get 0% interest rates ever again. Yeah. And I think that if we do, it's probably not going to be as bullish as it was before. It's probably something very bad.
Crypto, are you scared of it next year?
No, not really. I don't think crypto is going to go to like down another 30% or whatever. I mean, I don't know. Your guess is as good as mine when it comes to this, but I think crypto is already taking a 40% haircut. And while the market is at all-time highs, I don't think it's possible for crypto to go down further without bringing the market down with it. So, if the market goes down 10% from here, like all bets are off. Crypto is probably going to go down too. But there was an instance where that didn't happen. That was the SVB banking crisis, 2023. When that went under, you saw Bitcoin go up $10,000, and the market went down 5-6%. So like that sort of weird phenomenon can happen. I just don't think from a monetary standpoint that that's even possible again for something like that to happen. Or if it does, we're just never going to know about it.
I agree with you. I agree with Melanie as well. Sam makes solid points.
Oh,
I've never said that
see what
before.
you did there. I see what you did there.
I think that's an original. I don't think anyone's made that point before. Zeta. So I am new to this community. I am still learning about this company. You've been here for a minute. I really like what I am seeing. What is your kind of overall idea around Zeta? So
it has two things that I'm very bullish on from a secular standpoint. One, there's software. I think software is actually going to make its move in the next couple of years when it comes to AI, because we've seen it all basically stay in hardware and infrastructure, picks and shovels, right? I think it's finally going to start making that transition, which is probably the reason why we're starting to see a lot of these acquisition of AI companies from Meta and a lot of other subsidiaries as well, is that I do think it's going to come to software. And if I am going to be positioned for software, I want it to be positioned in companies that are very near profitability or at least already in profitability, right?
Yeah. Yeah.
And I think the juice from this entire industry is not going to come from more mature software companies. I think the outperformance is going to come from companies that are at that inflection point. So if you look at Zeta from a gap perspective, they are not necessarily profitable, or like they're very close to profitability. Yeah, there you go. That's the one that Nate Dogg posted on there. Not Nate Dogg the rapper. I'm going to start calling Nate Edmond Nate Dogg. That's just
I like
just your new name.
call him that too. I like Nate.
Yeah, Nate. He's Nate Dogg. He's Nate Dogg now. I mean, actually, him posting about it a lot is what kind of brought it to my attention. But I saw this last October, and I was like, actually no, I think I saw Zeta like in September. People were like getting riled up, and it went to like 20 something bucks, and then pulled all the way back, or whatever. And then I didn't really look into it until October, until I saw that CNBC interview, and I was like, I gotta look into this more, right? So they basically have an AI backend or LLM, whatever you want to call it, called Athena, that runs through all the data that it gets. And Zeta gets a lot of data. Their platform gets a lot of data from all of their clients, right? Yeah, that's the most. I mean, in my opinion, though, in this industry, there really is not that much of a moat. There's just companies who have a lot of leverage with data, right? And I think it's very important as we get good further into this AI theme, is that it's not a matter of how much data you have. It's just a matter of how you're able to process that data. Yeah. And that's the reason why you saw Databricks just like its valuation get enormous versus Snowflake, which isn't as much, because Databricks was actually able to help people utilize their data in the correct form versus like, I don't know, maybe it has to do with the fact that Snowflake was public and Databricks is private. But anyways, that's going to be a very big factor. And this is actually one of the reasons why AppLovin has had a monster amount of growth lately, because they've understood how to utilize this data they're getting for other applications. Now, whether AppLovin is like legitimately getting this data, I have no idea. They're obviously in some litigations about that. I think that's going to center around it for a while, but I like the advertising sector, and not in terms of walled gardens. When you think of like Amazon, Google, not Google, actually Google's not a walled garden. Well, YouTube is, but anyways, not in terms of that, but in terms of companies that are helping smaller businesses and enterprises bring in more marketing. So that is my mode from the app standpoint with Zeta. I'm sorry, advertising standpoint when it comes to Zeta, but it's also my bullish thesis on it with a software perspective. So when you kind of bring both of those together, it kind of creates a pretty good opportunity. And I don't want to just be in like a stock that they're not profitable or not heading toward it. Like the valuation kind of made no sense. Like why it was trading so cheap when they're constantly beating every single quarter 16 out of 17 times. Yeah. And on top of that, they always raise the guidance, right? And then the previous quarter, when they reported in the end of November or beginning of November, I think it was November 4th, they actually gave really good guidance, right? And then they re-raised that guidance once they completed the Marigold acquisition.
That bar was crazy,
right?
It went from 28% to 34%.
Yeah, it's to me.
If we want to invest in growth stocks, like you got to find growth and abnormally high growth to get rewarded by the market.
So I actually think they're going to continue reaccelerating growth, and I think that's where the story in this comes in, right? This is certainly no Palantir. Palantir is like, when you think of AI, hardware is NVIDIA. Software is Palantir, like just without a question. It's never going to take the cake from Palantir. But I do think that Zeta provides a very good software, not just the small businesses, which is important, right? You don't want to just be focused on small businesses like Klaviyo or HubSpot or a lot of those other companies, because that can be a very volatile business to be in, because small businesses don't sign like 10-year contracts for like hundreds of millions of dollars, whatever. And Zeta doesn't have those kind of contracts yet, but they will, because they're partnered with a lot of enterprises, right? So that's very important, because enterprise contracts tend to be a lot longer and they tend to be renegotiated once they want to add a new product. So I have a pretty good understanding of how the software industry works in this perspective. So you have not only the fact that they're reflecting toward profitability, likely in the next few quarters, but you also have the fact that they're inflecting more toward enterprises versus small businesses. And on top of that, I mean, the CEO is like making appearances everywhere.
I mean, people have told me they think he's shady. What is your thoughts on David?
So there was actually, I didn't do the research on my own. I saw a video on YouTube and I looked a little bit more into it, where it was like, there was something that happened back in like, I think the late 1990s or the 2000s, where he like sold a company like right before it went down or something like that. I haven't looked too much into it. I'm actually more concerned about what's happening today versus like bang on someone because of the fact that, you know, they did something a couple of decades ago. I think that's important to know the risk when it comes to
selling the company before the value goes down.
I think it was a little bit more than that. I
Okay,
forget
there's probably
exactly
more
what
to
it
that.
was. Yeah, I think there's a little bit more than that. And what's the name of that guy? Unrivaled Investing. You know that guy? He posts like some YouTube videos and stuff.
Okay, I'll check it out.
Anyways, you know,
So
there's
what's
obviously, yeah.
what's the bear case? Why do you think the stock trades at 3 times sales?
I think it's because it's in marketing, right? Marketing is a very volatile industry. So you saw what happened last April. You know, the stock market dropped down 20%, but like AppLovin, Reddit, Trade Desk, and all of these advertising related companies dropped down the most because it is the first budget to get cut out of all the budget. Like they're not going to cut
Good point.
AI budget. They're not going to, they're only going to cut so much headcount. Marketing. Do we need to advertise this much if we're not really hitting our numbers? Let's just drop it down a little. And advertise is expensive, right? So that's where the issue comes in. Now with Trade Desk, I think this is a bit more of a Trade Desk problem than an advertising problem. But the only problem is that they used to be the dominating demand side platform out there. And now you have other companies that are taking the cake from them. And on top of that, they can't really keep, the management is struggling here, right? You have, I keep thinking Matt Prince. I keep forgetting the name of the CEO of Trade Desk. And if you say it, I'm just going to remember it like in a second. But that's more of a Trade Desk problem. I think that this industry is, we haven't seen the full application of AI toward advertising and marketing. And I think that we're going to start seeing that secular trend in this whole industry. And I want to be a part of it, right? And I think AppLovin has already made a massive move. I'm looking for like that asymmetric comeback, which I did have AppLovin for a while and I sold it probably like $50 less where it is from here. I mean, it's probably going to keep going higher if this whole industry moves up. Same thing with Reddit.
Okay, so essentially it's a SaaS name in a volatile industry, but they have hedged the volatility with the beat and raises. That's not a perfect hedge, but it does, I think, give you a little bit of trust that the company can continue beating expectations. And if they can continue scaling at the level they're scaling at, especially with their free cash flow margins, they're very close to profitability. First party data could be more proprietary than not. That is your bull case for them. Do you see it as a $30 stock, $40 stock? How do you think of the?
I could see it as a $50 stock. I'd say if the market stays bullish, this is going to $50 in 2026. The market has to stay bullish though. Like even just the amount of gains that it eked out, like with just the performance of the market lately, like, it's such a small subset. But I do think the margin of safety is pretty wide for a company like this, right? So if we look at how things were at its worst from a price standpoint, also trading above the moving averages, which is good to see on the chart. I think the bear case, if the market falls, I think this thing can go down like $15-16, which is just where it was the other week.
Yeah.
But I do think the bull case is much wider. So if I'm risking 1 to make 6, that's a very good bet, right? So I think that's good too. And we'll see how the industry moves after that. Like, I mean, I can't really say exactly how things are going to pan out after like a year or two, but I do think the advertising sector is going to reform a lot of how people allocate their money towards marketing. But also, I think they want to concentrate more on single platforms. So what Zeta offers, though, is not just like, hey, we could set up emails for you. But it's like they also offer a platform that lets people buy ad space for the advertisers. They're somewhat of a demand-side platform. But then they also do everything else that a lot of these other companies do. And then you see companies like Klaviyo, they're basically doing what they did. And then they're also, they have a lot of products on their platform. The fact they have a platform is what helps the bull case as well. Like they don't just offer one single product. And
Agreed.
also they cater to multiple industries as well.
Agreed. Sam, last question for you. And again, you guys can follow him on Wolf Financial. He streams on their channel every day, right? 2 p.m.?
Yeah, we got about Monday through Thursday. I try to start around 2:45 and I end like around 3:45. I don't know, just a random time to end because like someone else starts shooting around that time. I don't want someone I know starts shooting around that time and I see like everyone's going there. It's like, yeah, but you know, I like to fill that gap in. There's like a good amount of time, late lunch that people have. Also like Pacific time too. Like
It's perfect.
they take the lunches around that time too. So
I love it. So you can follow him there. On Semiconductor, this is another big part of your portfolio. It's a name that really didn't get respect this year. Why is this a Semiconductor pick for you?
So this is a semiconductor pick because when you think of semiconductors, there's many types of chips that companies can produce, right? There's chips that are used for ASICs, which is application specific integration circuits, which can be used for like TPUs or search engines. There's general compute, which is what NVIDIA does. There's CPUs or central processing units, which is basically what's been popular for some time, and now it's no longer that anymore. But whatever, I get into that one. And then there's power chips. It's basically the chip that tells the power supply where to allocate energy or wattage to, how quickly to do it, when to tune it down, whatever. And that's kind of where On Semiconductor comes in. In fact, there's other companies that are similar to On Semiconductor, like Navitas or SciTime, and there's another one as well. I forgot what the name of the company is. But On Semiconductor is one of the fewest US-based power chip companies that is profitable too, right? So Navitas is a really good play in the sector. The thing is that Navitas does not have that financial portfolio that On Semiconductor does. Maybe they will eventually. I know Navitas has those partnerships with NVIDIA, but so does On Semiconductor. They have partnerships with a lot of the major OEM and manufacturers in the country. And on top of that, like I said, US-based, they're building a new plant in New Hampshire. They're eligible for the CHIPS Act funds, right? And on top of that, a lot of their power chips are more catered toward EVs, which needs more and more chips every single year. As new models comes out, you have more computers in there, so you need more power chips. And on top of that, you also have the AI infrastructure setup, where they have the virtual GaN technology, right? A lot of people probably heard of GaN technology, gallium nitride. Vertical GaN is like their subsidiary or their improvement on it that is going to probably start scaling in the next couple of years because they just released it this year. But I don't want to get too technical or not, but they're obviously seeing a lot of productivity, a lot of benefits from it, according to the most recent earnings call. But when you look at the EV, I think EV is going to have a major secular theme. I think we're actually in the middle of one, which is the reason why I'm seeing Tesla around $500. But you'll see Rivian come up. You'll see a lot of these other EV companies come up. It's like the market's kind of telling you that EVs are starting to come back, right? Especially as they start to bring those prices down, it makes a bit more sense to buy an EV versus buying an ICE vehicle or a gas car, right? So more EVs, more power chips, bullish for them as well. Actually, Tesla is also one of the clients, but not to the scale that SciTime is. But also the AI theme, right? Building out data centers and everything. That's where they contribute a lot for the power chips as well. And NVIDIA is one of their partners as well. So if you kind of bring these two themes together, which company is probably the most undervalued out of all of them? I've looked across multiple industries. That I have Amcor, Yumi, and StockTalk of Amcor. That's very good for the testing and packaging for a lot of these chips. And then you have TSM, which actually builds the chips. You have NVIDIA, AMD, and all these companies which design the chips. And then you also have these power chips too that need to be built in the US because you want to bring it onshoring, right? So this is like another thing that's on there. And the company is actually shrinking its revenue. In fact, I think next quarter is going to be the last quarter they're going to shrink revenue. And then they're going to inflect into the guided 10 to 12% revenue by 2027, which is a massive acceleration from negative 7%. And on top of that, they're buying back 1/3 of their market cap.
So this is a re-rating play for you. This is not like a massive growth play like traditional.
I mean, I think that, you already seen what the market does. Once Wall Street gets a sniff of something, they all just dive into it. The good part is that Wall Street never heard it. Well, they have heard of it. There's actually some forecasts on the stock, but like no one really talks about it, which is great, right? So I position myself shares wise, options wise, and I'll just let the thing grow. Where's the price target at? I think it'd go to $100 if this theme continues in the next couple of years, and I'll probably still be holding. Same thing with Amcor. It's like you can't really put price targets on these things because like when Wall Street jumps in the bandwagon, they like continuously do it over and over. That's like saying that like where's the price target for Palantir? It's like who knows? Like, but all these institutions just keep buying, so it's going to keep going up as long as the bull market stays, right? But if I also look at how it's performed, it's been outperforming pretty considerably. In fact, almost all the stocks that I own right now have been outperforming pretty considerably in the last couple of months.
I think that's fair. That is very, very fair. Sam, thank you so much for joining on the final market close. Shout out to Evan with the 5 gifted. 5 of you guys just got gifted memberships from Mr. Evan. I will be seeing him at CES And I'll probably be seeing Sam soon in a couple months for the LA meetup. Which you're gonna be in the New York one. Yeah,
I'm gonna be in the New York one. I'm gonna be in the New York one in February, man.
Dude, are you coming in on that Saturday or on that Sunday?
Yeah, I already messaged Chris and everything. I'll meet up with you guys. You guys will meet up on Saturday.
Yeah, we got some plans on Saturday, so we'll meet you there.
I was supposed to go to the CES, but I couldn't go. I'm gonna be in Florida next month. But guess who's gonna be at CES?
I think it's Stock Talk. He's gonna be there.
Oh yeah, he's gonna be there. But David Steinberg's gonna be there. Zeta.
Yes.
In fact, him and Dan Ives on cahoots. Like, I don't know, you kind of see these things happen. It's like, maybe there's like a motive to.
You think Dan Ives is gonna say that it's 4 a.m. for Zeta, or
I think it's gonna be one of Dan Ives. I don't think it is right now, but I think it's gonna be one of the picks that he has, and he has a major influence on Wall Street. So if that happens, he's been in the Palantir game since it started, right? With you since it started. I still remember that day when he gave a $25 price target. Everyone was like, "What? No way!" No, it was funny.
That was a big deal. I made a video in the park.
Big deal. Yeah, you interviewed him.
I interviewed him after, we interviewed him that week. That was because it just added some legitimacy finally to it, So I love it. Sam, thank you so much. Thank you for being an awesome friend this entire year. If you don't follow Sam, here's his Twitter, and I'm sure we'll be talking a lot more together in 2026.
All right. Happy New Year, guys. Take care.
Happy New Year. Later. All right. There we go, folks. That's it. That is the end of 2025. Absolutely freaking crazy. Again, we talked a lot about what I wrote in my